Good morning, everybody. It is now 7:10 a.m. Pacific Standard Time, and we have a weekly chart on the Dow. And basically, what part of our analysis is on the Dow is that we are going into a full-blown correction. Here's the 2009 bailout of March. There's that big run that these markets took all the way up here to the top, where we have a full reversal in play. If you take a look at where the swing high was on the Dow, which was right here, that swing high was 10,723, and it started out with a doji, weekly doji. The following week, we had massive down volume and selling in the Dow, because we did. This is a blow-off top from the March lows that we have encountered. This is how, just like when we went up, we had a blow-off bottom and we went all the way to the top. We have a blow-off top. And I would suggest that people that own IRA accounts, I would suggest that people that are invested in mutual funds that are not active traders or unfortunately less educated to the stock market, is that you start putting some kind of stop losses in your accounts, and that you do not become a victim potentially what happened in 2008 when we went straight down here. We've rewound the tape. I'm telling people that 2010, my forecast for 2010, which I haven't shared with anyone, but I can see where by the end of 2010 that we got support at 7,700 on the Dow. Mathematically, we went in one direction, and mathematically, we can come all the way back down. We are masters in using mathematical formulas on the Dow, the NASDAQ 100, NASDAQ Comp, and S&P 500. And we have confirmed a doji top weekly reversal. Now, another thing I want to talk about is why these events are happening. We are almost 600 points down within a 5-day trading range. And as I had said last year, the SMF 2010 market forecast was basically going to be based on how the banking system in the United States of America, how it was manipulated. Was there laws that were broke? Well, maybe, maybe not. We're going to find out. Today we have hearings in progress with Geithner and Hank Paulson, who had manufactured the AIG bailout. And was there any ethical violations within what happened? Well, they have the hearings going out, and our suspicion was that the taxpayer should not have been bailing out AIG, and that Bernanke is coming up for new appointment. He was there during this. Geithner at the time was in New York Fed, who now runs your Treasury Department. Not a very good thing. And another thing that we have going on here today is that Obama on the banking index had declared war. Basically going to raise taxes for lots of different things that are going to have come out there. Look at, they bailed out with the TARP fund. The government did that. The people didn't do that. The government did that. And the taxpayers got stuck with it. And basically now that you got this so-called recovery from here to there, I'll draw a horizontal, regular trend line. This was your great bailout. And all your stimulus is right up there to that top. Now that that honeymoon effect is over, who's going to be left holding the bag? It's going to be the poor, innocent people who have not been educated correctly, who do not have the coaching and mentoring that they need, who do not have the daily guidance that they need to be involved in these markets. You can make money still by protecting yourself, learning how to buy protection, so on the downside you make money. You made money, that was the bailout. This was your TARP money. This was the stimulances that had worked. These were the things that Ben Bernanke was involved in and how they manufactured it. And corporate America went from a very systemic deleveraging risk right back up to a top on the re-leveraging side. That means that now their stock prices are worth a lot more money than they were over here. And so corporate America got a great deal, and the banking sector got a great deal, but the consumer did get nothing. The consumer has been left out. The consumer is the one that is facing every morning the hardship when they get up. Is how are they going to pay their bills, or do they have a job today? Or is their job going to be here next week? And these are not good circumstances for the consumer, because that's 2/3 of our economy. We haven't seen any stimulances. We can't raise taxes either. Small businesses are terrified. Banks were, when the banks were getting all of their juicy 0% interest and making all these big time profits, nobody was lending money to the small business community. And you can see that there's a big disconnect between government, small businesses, and the consumer, people like you and me, who still live today. Rather, we live in fear because of everything that's happened. 2008 was not good. We have a counter trend on the Dow using this weekly chart. The thing about the economy is that our forecast says that the earnings growth that we are seeing right now in the earnings quarter is good. However, forward-looking sustainability is that the S&P 500 in itself is overpriced. And so basically we have all this new regulation coming out. It's a little bit too late. It's a little bit too late, because the damage has been done to citizens who live here in the U.S. And if you are involved in the stock market and you do not understand it, you have time now, because I'm telling you that on the Dow, we don't have any support till we come down here to 9,000, and we are going to come here. And I hope that you follow us at stockmarketfunding.com. And we do have on the website, you can sign up for some free stock trading videos. We're not going to go into depth on the tape. I'm going to show the S&P 500. The S&P 500 has just broke a major support level. 1090 on the S&P. This is where the same case again, my friends. The S&P has broke and is in an extreme reversal top, because it is. We put in the high at 1150, and there isn't any support on the S&P until the S&P's got support right back over here, right here at 1,000. That's where the downside is. That's another $86 or 86 points down on this weekly chart. We've reversed. We were too overbought. Our forecast for 2010 on the S&P toward year end, potentially, not potentially, we are having a problem here with the reversals on everything. And the selling, yes, we did need a correction, but there's a difference between correcting and hardcore selling. That's where people want to start taking these big profits that they should have never had to start with. So people like Goldman Sachs and all the big brokerage firms in America and bailing everybody out and putting the taxpayer into debt. Yeah, it worked for them, but it's sure not working for you. Okay? What I would like to show on the weekly chart, forward-looking by year end and going into 2011, which could be worse, because if the Bush tax cuts are not renewed, you are going to come back over here on the S&P 500, and that was the lows. And the thing about it is, we had a reversal low here all the way up to this reversal top on the S&P. And the economic picture and all of that stuff and all of the stimulances and everything with the attacking the banking system, with Geithner on TV here, with the AIG again, Paulson, Bernanke, you name it, it's what these officials did. And should they have been doing